India has its own version of Singapore's financial district. It sits in Gujarat, it's regulated like an offshore market, and it lets NRIs and Indian investors access financial products with tax benefits that most people have never heard of. It's called Gift City. And in this video, I'm going to explain exactly what it is, what you can invest in there, and why some of India's wealthiest families are paying close attention to it. What is Gift City? Gift City stands for Gujarat International Finance Tech City. It's a special economic zone built from scratch in Gandhinagar, Gujarat, right next to Ahmedabad. But here's the important part. Within Gift City, there's a zone called the IFSC, the International Financial Services Center, and this IFSC operates like a foreign jurisdiction inside India. Think of it this way: when you invest from within India in stocks, mutual funds, bonds, you're operating under Indian domestic regulations. You pay Indian taxes, you deal in rupees, you're connected to the Indian markets. When you invest through the Gift City IFSC, you're operating in a jurisdiction that's designed to mirror global financial centers like Singapore, Dubai, or London. Transactions happen in foreign currency. Products are structured differently, and the regulatory and tax framework is different from what applies to the rest of India. It's India's attempt to bring the advantages of offshore investing onshore, and interestingly, it's working. How it works? The IFSC structure. Let's understand the structure. Gift City IFSC is regulated by a single body called IFSCA, the International Financial Services Centers Authority. Set up in 2020, IFSCA oversees banking, insurance, capital markets, and fund management within the IFSC. Now, who operates inside Gift City? Major Indian and international banks have set up IFSC banking units there. NSE and BSE both have international exchanges operating there. NSE, IFSC, and India INX. SEBI registered fund managers, insurance companies, fintech companies all have a presence. Here's the key mechanic you need to understand as an investor. When you invest through Gift City, your money moves under what's called the LRS, the Liberalization Remittance Scheme. Under LRS, any resident Indian can remit up to $250,000 per financial year abroad, and investing through Gift City IFSC counts under this limit. But what makes Gift City different from simply spending money to a Singapore broker is that it's physically in India, regulated in India, supervised by an Indian authority, which means the compliance burden on you as an investor is far simpler, the access is easier, and the government's intent is clear. They want this to work. Investment products available in Gift City. Now let's get to what you actually came here for. What can you invest in through Gift City? The product universe is growing fast. Let me walk you through the major categories. First, global equities and ETFs. Through NSE IFSC and India INX, you can invest in stocks and ETFs listed on US and global exchanges. Apple, Microsoft, S&P 500 ETFs directly in USD. This is cleaner and often cheaper than using an Indian international mutual fund. Second, foreign currency bonds. Gift City allows investment in USD denominated bonds, including sovereign bonds and corporate bonds issued by Indian and global entities. For investors who want fixed income exposure outside the rupee, this is a significant avenue. Third, alternate investment funds or AIFs structured out of Gift City. Several fund managers have set up category 3 AIFs in Gift City that invest in global assets, global long-short funds, global private equity, multi-asset global strategies. These are designed for accredited investors with typically a minimum ticket size of $150,000 or more. Fourth, insurance and annuity products. Gift City now has IFSC registered insurance intermediaries offering products in foreign currency, particularly relevant for NRIs and HNIs looking at USD denominated life coverage or annuity. Fifth, aircraft and ship leasing. This one surprises most people. Gift City has become one of the fastest growing aircraft leasing hubs in Asia, competing directly with Ireland and Singapore. For ultra HNIs and family offices with structured exposure to alternative real assets, this is a niche but real product. And finally, startup and VC funds. Several venture capital funds are domiciled in Gift City, which allows them to raise and deploy capital in foreign currency, access global LPs, and invest into Indian startups through a cleaner, tax-efficient structure. Who should invest through Gift City? Gift City is not for everyone. Let me be direct about this. If you're just starting your investment, if your portfolio is under rupees 1 crore, Gift City is not where you should be looking right now. Domestic products, PMS, AIFs, bonds will serve you better at that stage. But if you fall into one of these profiles, Gift City deserves serious attention. Profile 1. The HNI seeking global diversification. You have a substantial rupee denominated portfolio. You want USD exposure, not through a domestic international fund with high expense ratios, but directly in foreign currency. Gift City gives you that access cleanly. Profile 2. The business owner with global ambitions. You have operations in multiple countries. You want to hold capital in a structure that's flexible across jurisdictions, in foreign currency with access to trade finance and global banking. Gift City's IFSC banking units offer exactly this. Profile 3. The NRI or returning Indian. You've held assets abroad. You're returning to India but don't want to liquidate your global portfolio. Gift City allows NRIs to continue managing foreign currency assets through an India-based structure without the complexity of full repatriation. Profile 4. The sophisticated investor seeking alternatives. You want access to global hedge funds, global private equity, or global bond markets that are simply not accessible through the domestic Indian financial system. Gift City AIFs and fund structures open that door. Tax advantages. The real reason HNIs care. Now the part that every HNI needs to hear clearly. Gift City IFSC comes with a very significant tax incentive framework put in place specifically to attract capital and compete with Singapore and Dubai. Here are the key benefits as they currently stand. 1. Zero capital gains tax on transfer of securities listed on IFSC exchanges. If you buy and sell global stocks or ETFs through NSE IFSC or India INX, there is no capital gains tax under the IFSC framework. This is a material advantage over buying the same assets through a domestic international mutual fund, where you pay 20% on long-term gains. 2. Zero securities transaction tax. No STT on transactions within the IFSC. In domestic Indian markets, STT is a cost on every trade, gone inside Gift City. 3. Tax holiday for fund managers. Fund management entities registered in Gift City get a 10-year income tax holiday on their profits. This is why fund managers are setting up there and why more choices are becoming available to investors. 4. Reduced withholding tax on interest income. Interest income from IFSC listed bonds is taxed at a reduced rate, currently 4%, compared to the standard 20% TDS applicable to foreign interest income for Indian investors. Now, a critical caveat. Tax laws change. The specific benefits I've mentioned apply as of current regulations. Before making any decision based on tax treatment, always verify with a qualified tax advisor. Because the benefit that exists today may be modified in future budgets. But structurally, the intent is clear. The government has made Gift City tax advantaged by design. And that's not an accident. Risks and limitations. Let's be honest about what Gift City is not yet. 1. It's still maturing. The product range, the number of participants, the liquidity on IFSC exchanges, these are growing, but they're not at the depth of Singapore or Hong Kong yet. You may find limited options in some asset classes. 2. The $250,000 LRS cap applies. Your total annual remittance across all purposes, including Gift City investing, cannot exceed $250,000 per person per year. For a large family deploying significant capital globally, this can be a constraint. 3. Currency risk is real. When you invest in USD denominated assets, your returns in rupee terms depend not just on the asset's performance, but on how the rupee moves against the dollar. A 10% gain on a US stock can look very different in INR depending on the exchange rate. 4. Regulatory and tax evolution. Gift City is a relatively new framework. Regulations are still being written, refined, and occasionally revised. What is permitted today or what is tax-free today is subject to change. Staying updated and working with advisors who track IFSC regulations closely is non-negotiable. 5. Complexity. Compared to buying a domestic mutual fund, operating through GIFT City involves more documentation, more compliance steps, and more moving parts. It rewards investors who take it seriously and penalizes those who don't. So, what is GIFT City in one sentence? It's India's attempt to build an offshore financial center onshore, giving Indian investors access to global products, foreign currency investing, and significant tax advantages without having to set up structures in Singapore or Dubai. Is it perfect? No. Is it complete? Not yet. But the direction is clear, the government's commitment is real, and the product universe is expanding every quarter. For HNIs who are serious about global diversification and intelligent tax planning, GIFT City is no longer optional knowledge. It's something you need to understand. If you found this useful, save this video, share it with someone who's been asking about international investing, and follow Moneylancer Wealth for more content on sophisticated investment products that most people never get exposure to. If you have specific questions about how GIFT City fits into your portfolio, drop them in the comments below.